A mutual fund is a type of investment where asset managers pool money from many investors and invest on their behalf. The pool of money is called the fund. The investors are called unit holders, and the asset manager is called a fund manager. The fund manager applies his skill and knowledge to invest on your behalf for a fee. Every mutual fund has terms specific to it, like the exact assets they will be investing in, the minimum amount you can start investing with, when to expect payments, if any, the number of days before you can liquidate, and management fees. The name of the fund gives a clue to what assets will be invested in. Equity mutual funds, equities will be invested in. Fixed income fund, then you see all fixed income securities. Eurobond funds, they'll be fully invested in Eurobonds. Ethical fund, then to be invested in ethically acceptable investments. Mutual fund investing is right for you if you aren't investment savvy and you are looking for an easy way to start. You'll be benefiting from other people's years of experience. You may need your cash soon, but you want to invest in less liquid or longer tenured assets. For example, if the fund is invested in something like a 10-year bond, you can liquidate your investment after 6 months easily. You are starting small or big. The minimum investment can be as low as 5K, so you can invest regardless of how much or little you have. You want to outsource your investing, but you want your investment to remain safe. Even if the asset manager goes into liquidation, your investment is still safe and as good as the value of the assets invested in for 3 reasons. 1. Your investment is kept with the custodian and is not in the name of the asset manager. 2. There is another company called a trustee that is closely watching the asset manager to ensure that they are investing within set guidelines. 3. There are regulators. The SEC is watching over your funds. Basic rule. At the start, take note of the terms so you know what to expect. If the fund isn't term guaranteed, then your investment value can actually go up or down. And going forward, keep your eyes on the unit price. Moving up or down tells you that you are making or losing money, respectively. And understand that the value of your investment will reflect the performance of the securities invested in.